Hello friends, I am Vishal Jain and you are watching GST Shorts. As discussed in the last video, the corporates are coming forward and becoming a helping hand in fighting this pandemic. The corporates has also pledged to distribute and donate the personal protection equipment, that is PPE, which is of utmost priority, the ventilators and other medical stuff to the healthcare system. Further, the donation or contribution made by them in fighting this pandemic would count as a CSR expense under the Companies Act. So, whether the taxes which has been paid on the procurement of these medical stuff would be available to the corporate as a part of their corporate social responsibility. Under the Companies Act, the certain specified companies are mandated to expend a certain portion of their revenue on the social activities as a part of their corporate social responsibility. Under GST, the ITC is allowed in case the inward supplies are being used or intended to be used in the course of furtherance of the business. The Section 2, Clause 17 of the CGST Act defines the term business in a very wide manner and also includes the activity incidental to the main activity of manufacturing or commerce. Since the activity of CSR is mandated under the law and the non-compliance of which could lead to repercussions on the company, the same is the part and parcel of the business and hence could be regarded as in the course of furtherance of the business. Even if the inward supplies are in the course of furtherance of business and the conditions of Section 16 are satisfied, the ITC could still be blocked due to Section 17 and Section 5. So whether the ITC on the CSR expenses would be available? Well, last year, the Kerala Authority of Advanced Ruling in the matter of Polycab Wires Private Limited, where the company has distributed the electrical appliances such as wires, switches and cables to the flood affected areas as a part of the CSR activities. The ITC was blocked by the authority under Section 17, Section 5 Clause H, which reads as follows. Notwithstanding anything contained in Section 16, Section 1 and Section 18, Section 1, the ITC will be blocked on account of goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. The distribution and donation of the healthcare stuff such as ventilators could not be regarded as the goods stolen, destroyed, written off or disposed of by way of free samples. But could the same be regarded as the gift? The Gift Act 1858 defines the term gift as the transfer by one person to another person of any movable or renewable property on voluntary basis for which no separate consideration is charged. Further, the Supreme Court in the matter of Sonia Bhatia versus the state of UP has defined the term gift as follows. A gift could be regarded as a voluntary transfer by one person to the another where no consideration is involved. Gift is an act of gratuity and generosity and should not be mandated by any consideration or any contract. From the above, we can infer that a gift is an act of gratuity and voluntary in nature. It should not be mandated by any contract or law. And if it is mandated, then it should not be termed as gift. From the above, we can say that the distribution of healthcare stuff, including ventilators, by the corporates to the healthcare system as a part of their CSR activity should be eligible for the ITC. However, it is still litigated. Even though the ITC is available on such CSR activities, the GST is not going to leave you soon. It will hit you again, this time from the output side. Because the para 1 of Schedule 1 to the CGST Act provides that in case the business asset on which the ITC is available has been transferred or disposed of on permanent basis, then it would amount to the output supply for the supplier even though no consideration has been charged. Therefore, in case the ventilators and other healthcare stuff on which the ITC is available as a part of CSR activity has been distributed and donated to the healthcare system, the same would amount as the output supply by the corporates to the healthcare system in terms of para 1 of Schedule 1 read with Section 7, Section 1, Clause C. Therefore, we can conclude that the distribution and donation of the ventilators and other healthcare stuff to the healthcare system as a part of CSR activity could be eligible for ITC and the one can try their best to avail the ITC. And even if the ITC is available, the GST will hit you from the output side in terms of para 1 to Schedule 1. I hope this video will help you in taking the right decision. Thank you for watching this video.